Hey everybody, welcome back. Big news from the Fed today. They announced a 25 basis point rate cut and plans to end the balance sheet shrink. Let's go over some key points from today's meeting, talk about how that impacted the markets today, what you might need to think about between now and the next meeting in December, and maybe we'll end this video talking about everybody's favorite topic, the reverse repo facility. Let's begin with a couple of bullet points here. The rate cut being the most obvious thing that everyone wants to talk about. 25 basis point cut, with the FOMC telling us today that the new target range for the Fed funds rate will be between 3.75 and 4%. This is our second cut of 2025 following a similar cut in July. Second big bullet point is that quantitative tightening will end December 1st. No more letting bonds roll off the balance sheet. As Chairman Powell said today, this is just execution of the plan that they announced back in May of 2024. Looking at an economic snapshot, what were a couple of his highlight comments? Growth for the economy downgraded from solid to moderate. Regarding jobs, gains have slowed. Unemployment is up, but still low. And finally, inflation somewhat elevated with CPI at 3%, up slightly from 2.9%. And maybe the most important bullet point out of today's meeting, Chairman Powell telling us that December is not a foregone conclusion. There is no preset path. To the extent that they can get access to data with the government shutdown, they will continue to monitor things. And, the market kind of reacted when he said that. You saw that dip in the indexes when he said there is no preset path for December. What was the market's reaction in general to today's FOMC meeting? I think that they were happy to see the rate cut. I think the quantitative tightening coming to an end, that's probably already baked in. It's been communicated for a long time. And there remains a little bit of nerves and jitters about the data gaps, as well as sticky inflation. Finishing up talking about quantitative tightening, the balance sheet, and some of y'all care about reverse repo. Here's a couple of thoughts. Since 2022, the Fed has been letting bonds expire, sucking now, as you can see on the chart here, $2.4 trillion out of the system, with a goal to shrink the pool from $9 trillion to where we're at right now, around $6.6 trillion. Why are they stopping now? Because they feel that we are now at an adequate level. The Fed's quantitative tightening runoff has reduced bank reserves, the chart I have here on the screen for you, by 1.3 trillion since 2022, but they will stop draining them on December 1st, locking us in right around 2.89 trillion with reinvestments to maintain ample levels. That is the goal. Ample. Let's wrap this up by talking about reverse repo, because I know a couple of y'all care about that. The chart on the screen here is the Fed's overnight reverse repurchase agreements. Back in 2022, we had a $2.5 trillion cash mountain, and according to the plan that the Fed has been enacting since then, they have now collapsed it down to just $19 billion. This is very much in line with where we were prior to 2021. I guess my takeaway thoughts on reverse repo are more simple than some of you want to hear, but it is just proof that the excess liquidity is now gone and cash is flowing into the real markets, not being parked at the Fed overnight. A couple of wrap-up thoughts between now and the December FOMC meeting. The market is now decreasing their expectations for a rate cut in December, but we do have a rate cut today, and that will tend to favor growth stocks, and the sticky inflation that we continue to deal with might continue to negatively hit cyclical stocks. The government shutdown may continue to impact or delay jobs and inflation reports, but in December, what we're going to be looking forward to in the early part of December is both the jobs report for November and CPI. The odds of a soft landing continue to remain high, but the fog of the government shutdown still leaves us with a little bit of uncertainty. Thank you for watching this evening. I am Tony Denaro. If you have any questions, let me know down below. And don't forget to hit that subscribe button, turn on the alert bell so you don't miss any future videos. Have a good night, guys. We will see you on the next one.